Tracy Luciani Price, Price Team Mortgages. We're top brokers in Canada with another mortgage myth. Happy Easter, by the way. We all had a good Easter. Good Easter at my home with my grandchildren and my parents. So it was fantastic. It's great to be back to work. Looking forward to helping whoever my path crosses. So mortgage myth number 9. We're getting to 9. That my bank, of course, is the only answer for a mortgage. I'd like to explain and educate you about how mortgages work in Canada. There are many types, and we'll call them A, B, and C. So A mortgages are prime mortgages, and lately, as of the last 2 or 3 years, you are now, as a homeowner, being segregated. Mostly everyone fit in at one point into the A category, no matter if they had some blemishes on their credit or their income was a little poor because they were self-employed. Everyone in Canada a few years ago got a AAA mortgage, the best rates in Canada. But that changed after about 2 years ago with the introduction of new regulations in Canada. And so homeowners are being segregated into different types of mortgages. So before you had no trouble getting an A mortgage, but now many Canadians are having trouble getting a AAA mortgage. That is the best rates in Canada. So why would that be? Why would you not get the best mortgage in Canada anymore? One of the issues is blemishes on your credit. So if you've had a few late payments, if you've missed a mortgage payment, if you missed a car payment, if you had property taxes that weren't paid up to date, if you owed a bunch of money to the CRA, all of a sudden, or you're self-employed and your income doesn't debt service, all of those things can relegate you to another category of mortgages, and that is the B mortgage. The B mortgage is a little bit higher, about a point more than the A mortgages that are running around 3%. The B mortgages are 4.5%, 5%, 6%, depending on the risk to the lender. So if the lender sees that there's a huge risk, you will get more of an interest rate. If it's just a small blemish and your credit score is still pretty good, maybe in the low 600s and high 500s, you may get a mortgage that is a B mortgage. Often these mortgages come with a lender fee and sometimes a broker fee. So I just wanted everyone to understand that, that you would be in a different type of mortgage if you are in a B mortgage. Doesn't mean that you're bad. It just means that you've got blemishes and you need some help. Now, the next type of mortgage that we have are C mortgages. C mortgages are private mortgages. And private mortgages are very beneficial, even though they come at a higher rate for people with situations that we need to put a Band-Aid. We need to stop the bleeding. We need to help them get out of the situation so they don't lose their home, or they're in a power sale situation and we need to help them stay. Or perhaps they bought firm and they can't close on that mortgage. Sometimes a private mortgage comes into play. So that's the A, B, and C. A mortgages can go up to 95%. B mortgages typically go up to 75%. Well, actually, it would be somewhere up to 75 to 80% if the property was in a prime location. The B lenders will go up to 75 to 80% of your value. The C lenders, well, it all depends on the credit risk and a lot of other mitigating factors, whether you'd be in a C mortgage, and those rates typically on a first mortgage are around 8% and usually about 12 to 14% if we did a second mortgage. That's private. So I wanted you to understand A, B, and C. So when you get a rate, you understand why. It is because you've got some factors in there that don't allow you to qualify anymore for an A mortgage. So what is the beauty of being with a mortgage broker? The biggest thing is, especially if you don't hop around from one mortgage broker to another broker, you have a broker that is invested in you as a person. They see you as a person and they want to help you move from the, let's say, the B category into the A category, or the C category into the B. So we're always looking to upgrade and help the client get where they need to be. Sometimes that can never happen because of circumstances, but more often than not, we have had many people who had a private mortgage move it back into an A mortgage, people in a B mortgage move up to an A, and it's information. People just need to understand what they need to do, because most people just don't even know. They're like, well, I only missed a few payments on my MasterCard. Why am I in a B category? Perhaps your score has slipped and they're really looking. Now they've changed the name of Beacon Score to FICO Score like the US. So that's why it is incredibly important to make sure that your credit is A1. That's the best way to get to back to an A mortgage, AAA credit. So anyway, that's all I wanted to talk to you about today. Find a good mortgage broker. Hopefully it's me. Give us a call, and we're going to make sure, whatever situation you're in, that we're able to assist you in the best mortgage product for your circumstances. Have a great evening, and we'll talk to you soon. Bye for now.